Today is Monday, January 23rd, and this is the ADM Investor Services Monday Market Kickoff. Today's guests are Alan Bush, Senior Financial Economist here at ADMIS, and Steve Freed, Vice President of Grain Research. Alan, now that we have President Trump in office, will his infrastructure plans come to fruition? And what is the outlook for base metals, such as copper?
Well, we've seen the base metals advancing rather sharply in the last year or so, and with extended gains more recently. Also, we had copper now closing in on its highest levels since probably in the last 19 months. Also today we have aluminum trading at a 20-month high, and iron ore has more than doubled in the last 13 months. So we predict that base metals will continue to work higher, and this could be an indication that Trump's much talked about infrastructure spending plans will come to fruition.
The gold and silver have recently been caught between the bearish fundamentals of a rising US dollar and prospects of tighter credit from the Fed and the bullish influence of increasing global inflation. Ultimately, which of these influences will prevail?
Well, it'll be the inflation influence that dominates, and we're already starting to see that. As we just mentioned, some of the inflation indicators, such as base metals, have advanced substantially as of late. We also are expecting wage inflation to increase as well. So it's the inflation influence that I believe will dominate, and that's a situation and an influence that remains day after day. So I would expect precious metals, gold and silver, to continue to advance all this year.
When will S&P 500, Dow, and the NASDAQ futures advance to new record highs?
Well, that's a very good question, but I think more importantly, what is the main trend? The main trend still appears to be higher. All of the fundamentals remain in place, suggesting that stock index futures will continue to advance. Now that you've pressed me on a time, I would have to say there's a very good chance we could see new record highs in some of the indices, maybe all of the indices, within the first quarter of this year.
Steve, what is the latest South American weather outlook and impact on crops and prices?
Well, we're in a weather market in the grains, and it's been kind of dry in Argentina and a little wet in Brazil. Over the weekend, southern Argentina got some rains that were unexpected. It's causing a little bit of weakness in bean prices today. The outlook in Argentina is for a drier trend over the next 2 weeks. Could impact corn pollination and dry the soils for the beans. In Brazil, 2-week forecast suggests steady rains across central and northern areas, which could slow the soybean harvest there.
President Trump is expected to sign an executive order to renegotiate NAFTA. What is the impact?
Well, right now we have to figure out what the renegotiation policy will be, but a large percentage of our poultry and a little less percentage of our pork goes to Mexico. And so we would have to maybe look at some of that backing up into the U.S. Mexico's also the U.S.'s #1 buyer of corn now, and so we'll have to watch and see the impact that that has. The Mexican government has already said that if there's any border tax or if there's any issues on trade issues with Mexico, they would no longer buy high fructose corn syrup from the United States, and they're one of the biggest buyers of that. So from a price standpoint, it might be a little negative to the hogs, it might be a little bit negative to the corn.
Last week, traditional funds added to soybean, soy meal, and soy oil longs and reduced corn shorts. Why?
I think there's a couple of reasons. I think we coattail what Alan was saying about inflation. I think it's that some of the funds have given more money to trade on the long side of commodities because of the threat of inflation. We also think we saw some buying coming in the beans because of the South American weather issue. And in corn, a little bit of short covering, maybe because the supply in the pipeline is not as good as what the market might need. And down the road, the U.S. farmers may plant less corn next year, and a trend yield would actually bring the carryout down. So this also followed the USDA lowering the soybean carryout here in the United States and globally. So I think there was a little bit of news to percolate prices and bring in new buying.
Please remember that the opinions expressed here today are solely the opinions of our guests and are not necessarily the opinions of ADM Investor Services or Archer Daniels Midland Company. If you have any questions or comments or would like to know more about our services, please contact us at www.admis.com.